Welcome back, everybody, to Cryptocurrency Weekly, where I keep you up to date on what's happening in the cryptocurrency space. From technology updates to the latest news, we have you covered. So if that's something that interests you, please subscribe to the channel and give the video a thumbs up, and please comment your thoughts below. This channel is for information purposes only and is not investment advice, nor is it buy or sell signals. This is my opinion, and that is all. So with that out of the way, let's get right into it.
Short-term price doesn't matter. We're talking about the greatest wealth transfer in history. We're literally watching everyone from individuals to corporations to financial institutions to now countries decide that they want a transparent, programmatic, certain monetary policy. It flies in the face of the existing system. We don't know what the next thing that's going to happen in the existing system is, and therefore that uncertainty leads to fear. And so what ultimately happens is that you are seeing people around the world, over 100 million individuals, now all the way up to countries, say, we need something that has certainty in the monetary policy. And when you have a fixed supply asset and there is ever increasing demand, and over long periods of time, more and more people, companies, corporations, financial institutions, and countries come in and start to adopt it, the US dollar price has to go up to accommodate everyone. It's the only thing that can happen if you believe in supply and demand economics.
Very interesting. So as we know, El Salvador, they have become the first country to adopt Bitcoin as legal tender, which is absolutely huge news for the asset class. Now, do you agree with Pomp? Do you agree that in a supply and demand economic equation that Bitcoin's price is all but surely going to go up from here? Obviously, nothing is a guarantee, but in microeconomics, supply and demand is an economic model, so it's a price determination in a market. It postulates that holding all else equal in a competitive market, the unit price for a particular good or other traded items such as labor or liquid financial assets will vary until it settles to a point where the quantity demanded at the current price will be equal to the quantity supplied at the current price, resulting in an economic equilibrium for price and quantity transacted informs the theoretical basis. Now, if you have a limited supply asset and we have all of this demand coming into the market, which it seems like that we do, okay, obviously taking into account as well Michael Saylor, who has just made a huge debt offering, okay, for stock purchases of Bitcoin as well. There's more money coming into this than there is going out of it, and I think over the long term that it is extremely bullish for Bitcoin, that's for sure. Let me know what you think in the comments below. Next up, African countries lead the pack in Bitcoin peer-to-peer trading. That's what the data shows. So a new report from Useful Tulips, that's a quite funny name, Useful Tulips, how many economists would be absolutely raging at that name, has shown that African countries recorded over 15% of the growth in their Bitcoin peer-to-peer trading volume in the past 6 months. According to Useful Tulips, the continent recorded a transaction volume of 17 million in May 2021, which is a 50% increase year over year. So big news. So it's interesting to me that we've noticed in countries like Africa, obviously, where their currencies aren't the strongest, that it seems to be the countries that have the most to benefit from Bitcoin adoption are the ones that are sort of jumping on it, whereas I noticed the Western countries like the US, Australia, and several others are really sort of looking at the regulatory side of it to try and stifle that innovation. It just goes to show, just to follow human incentives, I guess. Next up, Signum adds banking services for DeFi tokens, including Aave and Uniswap. The Swiss Digital Asset Bank is launching institutional-grade custody and trading services for DeFi tokens with yield-generating products to follow. So who is Signum? Signum is the world's first digital asset bank founded on Swiss and Singapore heritage operating globally. So this is really huge news. So these guys are basically taking custody of your crypto assets. Now, a lot of you long-term hodlers, well, first thing you'll be thinking is not your keys, not your crypto. And that is true. I would not personally give my funds to a custodian or any particular third party, even this one here, even if they are seen as trusted. But this will help for mass adoption of the asset class, in my opinion. Overall, extremely bullish. Next up, within 5 years, US hedge funds expect to hold 10.6% of assets in crypto. North American hedge funds are at the vanguard of crypto-curious investors, although the EU and UK funds are not far behind, expecting to hold 6.8% of their assets in crypto within 5 years. So guys, when you just look at the macro outlook for the asset class, we've got countries adopting Bitcoin. We've got institutions coming in. We've got crazy autistic people like Michael Saylor just throwing everything that they've got into the asset class. We've got central banks around the world printing infinite amounts of dollars. So over the next decade, I'm of the opinion, regardless of any short-term volatility, that cryptocurrency will be the best performing asset of the next decade. Not financial advice. A new survey of 100 chief financial officers at hedge funds worldwide has indicated that the sector is planning a significant increase in its exposure to crypto assets in the near term. The survey conducted by Intertrust suggests that if the respondents' forecasts were broadly mirrored across the sector, assets in crypto held by global hedge funds could hit $312 billion. United States-based funds were most bullish about the new asset class, expecting to raise their portfolio exposure to crypto to 10.6% on average within 5 years. High-profile hedge fund managers such as Paul Tudor Jones have also been vocal about Bitcoin amid concerns about inflationary tendencies in the economy. Paul Tudor Jones is a billionaire investor, and let's just hear what he has to say about Bitcoin as an asset class. Let's take a look.
Listen, I like Bitcoin, right? Bitcoin is math, and math has been around for thousands of years, and 2 plus 2 is going to equal 4, and it will for the next 2,000 years. So I like the idea of investing in something that's reliable, consistent, honest, and 100% certain. So Bitcoin has appealed to me because it's a way for me to invest in certainty, where, again, I look at the difference between the Fed of 2013, the Fed of 2021. I'm going, how can this, do I want to have faith necessarily? I look at the difference between Trump and Biden. Do I want to have faith in that same reliability and consistency of human nature and the linear nature of human nature, which we know is anything but that?
You like Bitcoin at these prices?
Listen.
You got in at about 10,000?
I like Bitcoin as a portfolio diversifier. Everyone always asks me, what should I do with my portfolio? My employees say, I say, okay, listen, the only thing that I know for certain is I want to have 5% in gold, 5% in Bitcoin, 5% in cash, 5% in commodities at this point in time. I don't know what I want to do with the other 80%. I want to wait and see what the Fed's going to do, because what they do will have a big impact.
Let me ask you about.
So a very interesting take there from Paul Tudor Jones. So it's clear from the way he was describing it as he sees Bitcoin as a defensive asset. Now, for those of you not aware, the Federal Reserve will be meeting at some stage today to discuss whether they're going to be raising interest rates. Now, I'm of the personal belief that they are a bunch of cowards and they won't do the right thing. They won't raise interest rates and they'll keep debasing the dollar. Okay? If they do raise interest rates today, okay, you should be expecting a market sell-off in all asset classes, from stocks to cryptocurrencies. Expect further downside if that's going to happen. So as we can tell, Paul Tudor Jones is extremely concerned about inflation. He believes it isn't transitory, as the Fed is trying to make people believe it is. So he likes the certainty of Bitcoin's hard cap supply. As he said, it's a predictable monetary asset. All right, so it makes sense that he's accumulating Bitcoin along with the other scarce assets, as over the long term, he believes the demand for Bitcoin will increase, which in turn will increase the price. We do know the supply side of Bitcoin, but we do not know the demand side. So the supply side of this for all of you Bitcoin holders is certain. The demand side is unknown. We don't know if the demand is going to increase over the next decade, but I'm placing my bets that I think it will increase. So I share Paul's thesis personally. Bitcoin is the most decentralized asset on the planet. It can't be controlled by an individual or government. Its supply cannot be increased, which in turn would erode its value. So compare that to the central banks today that do control the money and devalue the dollar. It's, just a night and day difference. So I believe as more people get educated on Bitcoin and understand the way the current monetary system is run today, we'll only see more users embrace the Bitcoin network. Thanks everybody for tuning in today. Please don't forget to subscribe to the channel if you haven't already done so, and let me know your thoughts below. Where do you think the market's heading, and what do you think of the bullish news out of El Salvador? Thanks very much for tuning in, and I'll see you guys next time. Take care.